Hey everyone, welcome back. It's Friday, February 6th, 2026, and what a brutal whipsaw week it's been for markets. We've seen a classic risk-off rotation. Tech stocks hammered, Bitcoin in free fall, gold and silver swinging like crazy, and investors scrambling for safety that isn't really safe. In the next 5 minutes, let's unpack the chaos in the past week and what it might mean heading into next. The headline: major indexes just wrapped their worst week in months. The Nasdaq is down roughly 4% for the week, on track for its biggest drop since that tariff scare back in April last year. The S&P 500 shed about 2%, flipping into negative territory for 2026 overall. The Dow held up better but still ended flat to slightly down after Thursday's 600-point plunge. What triggered the sell-off? A perfect storm starting early in the week. Tech stocks, especially AI darlings and semiconductors, led the way lower for 3 straight days. Investors are finally pricing in AI fatigue. Massive capex spending isn't delivering quick enough returns, valuations are stretched, and rotation is kicking in toward value and small caps. We saw Nvidia, AMD, and others get hit hard, some days down double digits, dragging the Nasdaq and growth sectors deep into the red. Then there's Bitcoin, the so-called digital gold, which has been absolutely crushed. It plunged below $60,000 to $67,000 levels this week, down over 50% from its October peak above $124,000. That's a massive unwind. Traders who chase the rally are bailing, and the narrative that crypto is a reliable hedge is taking a beating. Silver joined the party with even wilder moves, down 20 to 30% in spots before partial rebounds, showing how correlated these alternative assets have become when risk appetite evaporates. Gold? What a roller coaster. It hit fresh all-time highs near $5,600 recently, doubled over the past year on safe haven flows, central bank buy, and macro fears. Then this week, sharp corrections, dropping below $4,500 at one point, bouncing back toward $4,900 to $5,000 by Friday. Why the violence? When everything sells off together, stocks, crypto, even metals, it exposes how interconnected markets are in stress. Gold's boring store value image got meme stock treatment. FOMO in, panic out. Broader drivers: discouraging jobs data, weekly claims higher than expected, lingering policy uncertainty, Fed path, potential rate hold, and sector rotation away from megatech toward value/small caps/emerging markets. Small caps actually held up relatively well in spots, hinting at a leadership shift that's been brewing since late last year. Friday morning futures? Rebounding nicely, S&P and Nasdaq up 0.5 to 0.6%, Dow similar, with tech shares popping and Bitcoin steadying. Is this the bottom or just a dead cat bounce after 3 days of selling? Hard to say, but the VIX fear gauge spiked, volatility is back, and breadth has narrowed dramatically. Big picture takeaway from this week: markets are reminding us they're not invincible. After years of low volatility and tech dominance, we're seeing cracks. Overstretched valuations meet real-world scrutiny, crypto hype deflates, and even traditional safe havens wobble when risk-off hits hard. February could stay choppy. Eyes on next jobs reports, more earnings, and any policy headlines. What stood out to you this week? The Bitcoin bloodbath, gold's meme-like swings, or the tech unwind? Drop it in the comments. If this breakdown helped make sense of the madness, hit like, subscribe for more weekly recaps, and ring the bell. Thanks for watching. Stay sharp out there, and we'll catch you next time.